Good morning, everyone, and welcome to the European crossover webinar. And we did see a turnaround here in the euro and also obviously the dollar index post FOMC. Not going to worry about what the details are. However, the market wanted to interpret the whole Fed thing. The key thing was that the euro held on that pullback, and it looked like, and not it looked like it did. We did get a dump there. And we ended up holding here with the euro. So it was a really good thing for the bulls. Took this dump here, and but we did hold above those lows of 1070. The low was ended up being at, 1081. And then we saw this market turn around. Actually, we saw a very nice little hammer. And then I noted if we can get past 1130, remember on our bias chart, there it was 1130 with the asterisk. So we had that asterisk because that was a daily close. If we can get above that, that would open the door. Now if we can move higher, and move higher we did. We had a resistance at 1160. They did get above that in Asia, and they just paired back a bit. I was actually trading in Asia, came in here and scalped just a little bit, actually on the short side, but I was it had actually pressed even higher than what I thought, but ultimately ended up coming out okay, just on a scalp, really. But we're holding up very well here. And bear with me. Obviously, we saw things turn around here with the cash dollar index. I've been talking about that 97.89. And we had for our bias chart resistance, I think we had it, we did put the 98.11 there. Hang on. Yeah, we sure did, 98.11. So that was that little overshoot that we talked about. Not overshoot, but I'm saying on the rebound rally. Remember up here, there it is at 98.11. In the case the market rebounded further, we had the 34, but really the market was already weak to start with. So it just barely made it to maybe kiss the 98, and then we rolled back down, and then we've had our support at 46 and at 20. We're still holding above the 20, but you can see there's a potential for us to come down here to 97 even right here, which would obviously go on and push the euro higher. Dollar CAD did have this nice rally up in here in the dollar CAD. This was frustrating in the sense that when the market was moving high after Bank of Canada, and we were holding above, actually we had our secondary support resistance level was 3160, and I was watching, I go, man, this is even higher than that. And as I ran the fib, said, wow, this is even holding above that. And I thought, I don't think it's going to make it up there, but wow, if it did, wow, 3112, that's 50%. And when the dollar was really starting to strengthen, I didn't even notice. That was when the euro was coming apart. I was paying so much attention, I wouldn't even trade the euro, that I completely forgot about this and missed the opportunity to sell this right, at a great area here, even if it was starting to run out of gas before it got to 3112. And could have kicked myself because, like I said, by the time I saw it, I think we were already at 3180, and was just really upset with myself. I'm missing that because I'd already seen it and thought, wow, if it makes it close to that, that's a fantastic risk reward, because you'd expect the market to pare back from there after such a run, and obviously we did. Cable still on the bid here, and we are above our bias chart resistance right now with cable. We had it, which it wasn't even able to take it out yesterday, and we are above it today, which is the 2913, and we're now finally scaling beyond that. And really key, it comes up to this this big old pivot, 2980. So we shall see. We also saw the dollar yen. How about this? We actually tagged the pivot here too. Look at this. Right there at 927. We've talked about that a few times. and we came right up there. I think we may have come up by 1 pip short, maybe. No, we actually got to 28. So we got 1 pip above, because really we have this. I have them say it's 927. Got to 928, and obviously the market turned lower from there, and we actually started to push a little bit lower here. Dollar peso fell apart again, which is really no news. Once again, we're just kind of touching base on everything. We're going to move into the into the news. Obviously, with the FOMC, the big deal was the majors, not necessarily the cross rates. But you can see here we rallied up, and there was our bias chart resistance. There's the upper portion of the secondary, 1923. It did make it up to the 1923.6 and then rolled over. We have the potential right now to break below this 19 finally. Not that I was thinking we were going to do that, but because that 1902 held really well, but we just can't even get past that breakout pivot right here. Just can't do it. Let's go and take a look at the economic data coming up. So it's Halloween. So happy Halloween to everybody. We did get German retail sales, okay? And Reuters poll was for 0.2. Well, they only got 0.1. So the saga continues. Obviously, since we're still under the, we're dealing with the daylight savings time, the rest of this other data doesn't come up. Spanish current account balance, that's not even until the top of this next hour. Then Italian CPI, it's going to be at 6 a.m. Eastern with HICP flash at 6 a.m. Eastern. So we will get some data coming out, but it's going to be a little bit later. We do get challenger layoffs and personal income and spending. Core PCE, those are all at 8:30 Eastern, of course, with the usual jobless claims. We do get Canadian GDP with producer prices and Shy PMI at 9:45. Chicago PMI, affectionately known as Shy PMI. Just noticed on the ADP came in at 125,000 yesterday. Let's go and move this out of the way. And with that, let's just go on and move into the news. So the dollar falls after the Fed move and Chile cancels a hosting APAC. The dollar declined against a basket of major currencies on Thursday, reversing earlier gains after the Federal Reserve cut interest rates for the third time this year. And it's a signal for a potential pause in the easing cycle was taken with a pinch of salt. It lowered its policy rate by 25 basis points in a target of between 1.5 to 1.75. The U.S. Central Bank has dropped a previous reference to its policy statement that will act as appropriate to sustain the economic expansion. The language is considered a sign for future cuts. Still, a lack of explicit signal from the Fed that it is done with easing for now was perceived to be less hawkish than expected. helping to drive the dollar down. The new, slightly shorter statement tries to keep their options open and puts them back into a data-dependent mode, but current circumstances could mean that they have less opportunity than they think, said Tim Foster. The dollar index rose to a high of 98 as Fed Chairman Jerome Powell spoke about its decision, the highest since October 17th before slipping. The index was last down 4/10 at 97.29 with its lowest level in a week. The euro last changed hands at 11.65, down 1/10, while the greenback last traded at 108.66, was lower on the day. The dollar was also pressured versus the safe haven yen by news that Chile has withdrawn its host as an APEC summit in November, where the U.S. and China had been expected to take major steps toward ending a 15-month-old trade war. Optimism that the world's largest economies would sign an agreement on a partial deal has boosted risk appetite this week. The fact that Chile has canceled the mid-November APEC summit should not be a deal breaker for the U.S. and China to reach a truce, said Tai Hu, Asian strategists. If the two sides were generally willing to reach an interim deal before mid-December, when the next scheduled hike in tariff on Chinese exports is due to take place, they'll find a venue to get the deal done. The Bank of Japan kept its ultra-easy monetary policy in place, as expected, and changed its forward guidance to more clearly and signal the future chance of a rate cut. Traders are focusing on BOJ Governor Haruhiko Kuroda's press conference later on Thursday to gauge his assessments on the risk posed by the U.S.-China trade war and Brexit. Sterling edged up after Prime Minister Boris Johnson won parliamentary approval on Wednesday to hold a general election in December. The moves were limited as a large currency option expiring this week curbed volatility. The Aussie and New Zealand dollars were firm as investors scaled back wagers on local interest rate cuts. Westpac economists changed their call on New Zealand rate cuts, now expecting no cut at the Reserve Bank of New Zealand's policy meeting on November 13th. Traders have been lengthening the odds on a move from the RBA, though. Australian dollar scales a 3-month peak, and the New Zealand dollar follows as rate risk shifts. The Australian New Zealand dollar firmed on Thursday as investors scaled back wagers at local interest rate cuts after the Federal Reserve signaled a pause in its easing campaign. Some solid domestic data on housing and trade also helped offset disappointing readings on Chinese manufacturing and services activity. They also reached a 3-month top at 69.28, having been as low as 68.49. At one stage on Wednesday in a bullish technical development. The Kiwi popped up to 64.24, leaving behind Wednesday's low of 63.35, though it still faced resistance at the October peak of 64.36. It got a helping hand when Westpac economists changed their call on New Zealand interest rates, now expecting the Reserve Bank of New Zealand's policy meeting on November 13th to have no cut. The bank, like much of the market, has thought the RBNZ was on odds for its cut its cash rate by 25 basis points to 75, but a run of better domestic economic data and an improvement in global market sentiment changed the balance of risk. Also influential was the Fed's decision to move to a more neutral stance. U.S. and Australian central banks are suggesting that they have cuts rates far enough for now. However, we do expect the RBNZ will remain open to the possibility of future cuts. The market now implies a 54% chance of November easing. So let's go and move on to the analysis. Well, things have certainly turned around here for the euro. And one of the things we talked about was is that if we could get a daily close above 1130, that would turn things around here. And certainly looks like that's going to be the option here. I mean, we did get that close, but we can get things turned around. The market now has the potential to get up here to 1213. Let's move this here. not that we can't go higher. Really, after setting that, the market has the potential to go actually eventually up here to 1285, but it goes back to the same thing. Got to crawl before you can walk, and walk before you can run. And it'll be interesting. Can we get, if we get this daily close above 1170, 1169, that will certainly boost our opportunity to move higher. But for right now, the initial target is going to be 1213. Now, as far as resistance, you're coming in right there at 1179. Let's go right there and split the difference here. Which resistance will be right there at 1194. 1194. Support's going to be right there at 1123. Not that it looks like the market will pare back, but in case, it would be 1123. Now, 1130 obviously is a key on the daily close, but how far could we stretch back? It'd be 1123. Let's move on to the cable. Well, the resistance right here, you can see it right there. Clear as a bell. It's this major level 2980. Nothing else to be said on that. Let's go to the 2 hour for some support. Actually, going to come in right there, 2827. So if we were to see this market turn around, that's where we'd come in. Let's go moving to the Aussie dollar. Okay, and I actually forgot about my analysis here, so I can just go right over that. The Aussie closed at its best level in a month. You can see there we finally got out of this whole range, okay? The pair has a potential to 70. Immediate resistance is now 69.44, and support is 68.31. We can probably do better on that support, which would actually come in now at, let's see, actually, this. Right there. You see that little, right there. So support's going to be right there, 68.52. And resistance, 69.44. Let's go move into the Kiwi. Kiwi closed above 63.89. The immediate resistance is 64.50. You can see that 64.36 here, but the immediate resistance is 64.50 with a potential to 65 even. Support is now 63.50. There we go. So you can see the significance of getting above the 63.89. Finally, we're able to pick itself up, and certainly we have the potential to move much higher now with this whole rate expectation thing and the dollar paring back. So we shall see. One moment. Let's go move into the dollar CAD. Like I said, we got past that secondary resistance at 31.60 and moved up higher. And I'm thinking, hey, where are we at? And I thought, once you get past FOMC, could we get all the way up here? And I didn't think we could, but I thought, man, that'd be a great resistance level. And when the dollar took off, I was so busy watching the euro come apart that I completely missed that. And that was really frustrating because I didn't even notice it until we were already at 31.80. And then generally I won't hold. I mean, I'll scalp. So I thought, no way. I mean, now look how much I've already, given up on this thing. Although if you look on a 2-hour chart, we had set a nice, look at that. It's beautiful right there. But this is now where I was coming in. When I noticed, I'm like, okay, well, I missed that. I'm not going to jump in now. Okay, now I'm ready to go in short. And I thought we would eventually push down, and we did. But look, I mean, that was just wonderful risk reward opportunity up there. And I was so busy looking at the euro when it was getting, they're dumping it, that I completely even forgot about the dollar CAD. So I was just really ticked at myself. But that was an excellent opportunity, I mean, from a risk-reward standpoint. That being said, let's go over the analysis real quick. The dollar CAD made its move post-BOC and FOMC. Secondary resistance level 31.60 was easily taken out post-FOMC. The pair stopped just ahead of 32.12 to 50%. Support is now 31.36 with resistance at 31.96. So here's that 31.36. That was that area that we kept thinking it was going to eventually get to, and it never would. And eventually we were able to get past that easily on Bank of Canada, and then even get past the 38%, or our secondary level, which was 31.16. That's what I'm thinking, wow, how far can this thing go? But let's go on in. So the resistance is now this now turns bullish. Resistance is going to be 31.96 and 31.36. You can actually mark this off. Let's go into the dollar peso. So the dollar peso challenged the breakout level of 1923.6 and was ceremoniously turned away. The market pulled back to 1908. Support is now 1898 with resistance at 1916. So as I mentioned, now we can go in and break lower. I think that potential is certainly there. So it'd be 1898. Like I said, this was actually our secondary resistance if it could make it up there, and it did make it up there, but it got turned away rather strongly. Let's go move on now to the dollar yen. Well, we talked about this was our bias chart resistance for yesterday, which was the pivot, 927. And that's exactly where the market ran out of gas. I think we saw it actually made it to 928. We got turned away, and the market has rotated lower. That being said, I mean, and certainly you can look right here at this setup, but I mean, it still has this bullish mode. I think obviously we're going lower though. Resistance now comes in at 892. You can see that here, right there, right there. I'll call it 893. Actually, it looks like we got, that's the high for the day is 890. So 893. And we'll stay with support here at 812. Obviously, it certainly looks like it's going to potentially come in lower. Well, that was our extreme. Right there. Our previous before had been 828. We'll go back with that 828. Let's go into the cash dollar index. Dollar index failed post FOMC with the potential to 97 for starters at 96.50. Resistance is 97.89, support 97.20. Well, we'll probably have to move into the 2-hour chart to get a better feel for this. So let's take a look. right there. 97.50 is going to be resistance. Might be a little bit tight, but we'll go with that. And support, we're going to go to all the way down here at 97 even. I think the potential to get down there. And with that, we're going to move into the cross rates. We have made this move above that 67.98 here on the QEN. And I think it can advance further. The prior high before here was 70.08. We'll go with that right there, actually 70.08. And on the support, it's going to come in right there. 69.49. And let's take a look here with the euro yen. It's still going to remain the same here, 21.72. I think we had that for our little stretch area. And support. $21.02. And here with the euro odd, obviously continue to break down as the odd strengthens, and that support is going to come in right there, 161, 61 even. And despite the euro's strength, it was coming against the dollar. it certainly is losing ground here against the odd, and resistance now comes in right there at basically say 62 even. Right there at 62. 6202. A little bit stronger. 6206. Let's go move into the Euro QE. And this pair slides right back down the hill again and right into support. You can see that we're bouncing off of that. So we're going to stay with that 73.66. Actually head down to 73.59. That'll be fine. And on the upside, right there at 74. Seems like a little bit too low there. But they'll be looking to sell against that, which will be 74.48. Go move into the Euro, Aussie yen. We did break up a little bit higher here. But this market is exceptionally oversold. I mean, just in the meantime, we've got this 75.31 here, which they've run into some trouble there. That's going to be the resistance here, 75.31. Can push a little bit higher. We'll stick with the 75.31 here. Support will be 74.64. Guppy continued to remain with a bid, and we have the potential to move even higher, which is actually the challenge for this 41.82. But that's a bit of a stretch here at this moment. Right now, resistance So it looks like it was to pop beyond that. It's going to be right there at 41.25, 41.25. And support will be right there at 39.68. Sterling out, obviously, we've seen the Aussie strengthen, so how much further we can push, that support's going to come in right there. If we push any lower here, which is going to be 86.09, we've had a pretty good little dip already. Go just below those lows, which is 80, 86.37. Resistance will be right there, 87.90. We have seen oil recover. If you saw my post on there, I mentioned there was no real resistance until you got to 55.30, so you could easily get stopped on this thing if you try to stand away. I have resistance right here. I was going to try to short it, but I can't do stuff like that when I'm on the webinar. I'm trying to scalp, but just had resistance right here coming in right there. You see that level? Had there coming in at 55.50. So looks like we just tagged 55.48. See right there coming in right there, and I had that pulled in. Actually came in at 55.55. We just got up to 48 and we're just pairing back. But that's on the futures. I'm saying is this on the CFDs. But the futures, we got up to 55.49. We have seen a bit of a rebound here on gold. Someone was mentioning about gold being off. I said yesterday, when they're saying this, we're at the bottom, they're saying something about this being so, how it started to come back or something like that. I'm like, well, wait, we're $36, nearly $36 off of the high. So, you would expect the same to come back. So once again, we'll see where this thing can go and move to. Bunds are strengthening a bit here. S&P, well, like I said, that's why I'm putting levels on this because this thing continues to move higher on that supposed China news deal. And that's all that we have here for today. But thanks for joining us here on the European Crossover Webinar.